In this video, I'm going to share with you the exact setup I have used for over 10 years that shows up in the market almost every single day. It is reliable, consistent, and it offers a great risk to reward so you can stop blowing account after account. I'm going to explain to you exactly how to spot this setup, when to enter, where to set your targets, and your stop losses. I'm also going to go over why other traders fail so you do not fall into the same trap. Now, make sure you stay to the end of this video as I'm going to dive into the charts and go over some live examples and also some specific rules to follow to make sure your win rate stays as high as possible. And now, before we get started, for full transparency, here is a screenshot of my trading portfolio. And while I do not trade nearly as often as I used to because I am a father of 3 young boys, I run a business full time, and all of my profits I made over the last 10 years, I invested that into appreciating assets to build passive income for my family. I was still able to pull out on average a little over $10,000 every single month trading this one specific strategy. And here is a live recording of my broker statement showing you just a handful of trades that were taken over the last 13 months. And while there are some losing trades, which is inevitable, you can see my win rate is very high. Lastly, I am going to explain this strategy in as much detail as I can, but I do not want to make the video too long. So if you have any questions, leave them in a comment down below, and I will do my very best to answer each and every one of them. Also, leave this video a like. I will really appreciate it as it helps with the algorithm and will help spread the video to as many people as possible. The first thing we are going to do is mark out pre-market, which is from 4 a.m. to 9:30 a.m. on Eastern Standard Time. You're going to switch to any intraday time frame on your chart. The reason why right now you can switch to any intraday time frame is because you will find the same high and the same low, whether you're on a 1-minute chart or a 1-hour chart. You're going to find that range by marking out the high and the low. You're going to make a line across and identify that range. Tip number 1, look for tight ranges, and I will explain that in detail, all of these tips later on throughout the entire video. The name of the setup is called the pre-market break and retest. And as I said earlier in this video, this is the same setup I have used for over 10 years after I first learned about it and practiced it for quite some time. I have traded a bunch of different stocks as well as options using this exact same strategy. So in this video, I'm going to explain to you exactly what the pre-market break and retest is, how to spot the highest probability setup to get you the best win rate as possible. I'm going to go over why other traders fail so you do not fall into that same trap. We're going to talk about some specific rules to follow, and then at the end, go over some live charting examples so you can get a better picture of what I am talking about with this setup. By the end of this video, you should have the confidence enough to execute without hesitation and stop overthinking. This is a perfect example of exactly what a break and retest is. You are waiting for price to break out of your pre-market range and waiting to see if it comes back to retest the top of the range. The reason why we are doing this is because we want to have confirmation that price is going to continue to move in that same direction. A lot of traders fail because they chase price. A lot of traders will chase what is called breakouts. The reason why they fail is because they do not have patience or discipline enough to wait for confirmation. They also do not understand liquidity or how markets move. Here is another example of the same exact chart we just saw on a few slides ago, where price is consolidating during the pre-market. We map out our pre-market high and our pre-market low. We see price price break out of that range, which at 935, it moves to the downside, and then it immediately moves back in the range. The reason why this happens is because market makers are always seeking what is called liquidity. They are trying to trap traders and stop them out of their trades. So any range trader that placed their stop below pre-market would have gotten stopped out, and every breakout trader that had chased this to the downside would have immediately been red and probably stopped out very, very quickly. After we get our initial break outside of the range, there's a couple things we're going to be looking for. One, after we just looked in the last video, we want to make sure we get a strong, true break of that range. You're going to want to see price action and look for a support and resistance flip. So as you can see here, right now, your pre-market high is acting as resistance and your pre-market low is acting as support, and price is just bouncing off in between that. Once you get a break of a range, you're looking for that true flip that I just mentioned, where what was once support is now turning back into resistance. And what you want to do is enter as close as possible to this range. The reason why you are entering as close as possible for this range is because anytime you are trading, you cannot just look at how much money you are going to make, or you could make, but you want to look at how much money that you are risking and how to keep that risk as low as possible. Tip number 3 on here is you want to make sure you have at least a 2-to-1 risk to reward. And by doing so, that means even if only 50% of your trades play out in your favor, you are still going to be profitable as long as you can execute effectively. Now, this is one of the biggest questions I get from people who are trying to perfect this strategy, or where I see the most flaws happening in people that are not quite yet profitable with this specific strategy. It's how to properly find a 2-to-1 risk reward. And there's a couple things that you want to have. You never want to place your stop loss randomly or place your target randomly. You want to look for a specific action that has occurred on the left side of the chart on where you can place your stops and your targets. So for this example, there's 2 specific things I want you to look at. The first thing is going to be, you never want to place your stop farther than the opposite side of the range. When price breaks that range and it tends to go back into this range over 50% to 75%, there's a good chance that either price is just going to bounce around and you're not getting good price action, or it's actually going to rip through to the other side. The first target you should have on your chart is that initial low, that initial break of the range that we got. So if you're looking at this exact example that I gave you, you want to enter as close as possible to the initial break of the range. As you can see, we entered right here. If you are targeting this first low, which is a perfect target to have, you want to make sure you only put your stop that gives you that exactly 2-to-1 risk reward. Now, if there's ever a time where this break was not low enough or not strong enough, and you're going to mark this out and you're 2-to-1 where your stop loss is going to be outside of the range, that is not going to be an optimal setup. And I will go over that in just a moment with live examples. Before we get into the charts, I need to answer this one question that I constantly get asked: which time frame should I use, or which time frame is the best time frame to use? And I want to answer this question very subjectively because it is going to vary person to person. You can utilize this strategy with any time frame under 30 minutes. My suggestion for you would be to pair your time frames to make sure you are seeing the same picture. If you're seeing a break of structure on the 15-minute, drop down to the 5-minute or 3-minute to make sure that price action and the picture that you're seeing is showing a similar trade. Therefore, it is going to give you the highest probability that price is going to continue moving in that same direction. Here are 3 different charts of the same stock showing 3 different time frames, the 15-minute, the 5-minute, and the 1-minute, and you can see the picture that is playing out. The last thing I will mention is the larger the time frame, you will have less opportunities, but there is less noise. You can see by looking at the 15-minute, it is a very clear break retest. You can see by this massive long wick to the upside that price action was continuing to move in this direction and the sellers were very strong. You drop down to the 5-minute, it's still painting the same picture. Price action still looks pretty good. When you go to the bottom chart of the 1-minute, you can see there's an initial break and then it pops back into the range and then it looks like it goes too far away and there's a little bit more noise. So my suggestion would be find what works for you and understand that the larger the time frame, the less opportunities, however, the less noise. All right, everyone, if you've made it this far, we are going to start looking at the live charts right now. Here is our first example of the pre-market break and retest. We've got our high mapped out and our low mapped out. We currently have a break to the upside. Now, what we want to see is if price does come back down here, you're going to see a couple candles, price slowly moves, and what we want this once was resistance to now flip as support. So as we go a little bit further, we do see that price does start to come back down towards our pre-market breakout level. Now we're going to pause it just one more time and we are going to be getting ready to see if we have an opportunity to go long. So we're going to take our chart over here, look at where our first target would be just above these highs, and to see where we can place our stops to give us a 2-to-1 risk to reward. Now, before I even get into it, I know I am not going to be able to make it all the way to the other side of the range, and that's okay in this situation. A lot of times you don't want to see price come all the way back here. As I mentioned earlier in this video, no more than 50 to 60%. If you're looking at pre-market, you can also see price bounced off of this 258 level quite a few times. So that would be a good place to put your stops. So as we're dialing this in even further, we can see that we will get a 2-to-1 risk reward right below this. This is a trade that can easily be played out and executed. Let's see what would have happened. As price moves forward, it immediately continues to rip to the upside. This is a beautiful example of what a pre-market break and retest looks like. Tight range, price breaks out, comes back in, taps into it, and then continues to go even further. This is another good potential setup. We currently have Tesla. Yesterday, price moved sideways and we just consolidated. It continued overnight and into the pre-market and has currently developed a very tight range. So we're going to take our line right here. We will mark off our pre-market high and extend it over into the open. We will then mark off our pre-market low and extend that into the open as well. Now let's see how this trade would have played out and if there is an opportunity to enter that gives us our 2-to-1 risk reward. So as you can see right here, price did break to the upside. However, we never officially got that retest. Price just carried away and continued to move higher. This will happen to you, but remember, we do not trade in order to guess which direction the price is going to move. That is called gambling. We are waiting for our specific setup to occur and waiting to execute if it gives us the proper risk to reward. That is what trading is all about. As you utilize this setup, you are going to find many times when price does break one direction, you are waiting to see that retest happens and price just continues to move that way. And that is all right. Like I said, you are not a gambler and you have to be able to move on from it and still wait for that retest. This example is going to be the best one in this entire video explaining the pre-market break and a retest. It is going to give us an optimal entry. I will go through every single criteria that is met as well as what rules to follow. So we've got our tight range that I'm talking about where price is moving sideways, bouncing off between support and resistance. We are waiting for that break on either side. We want to see a strong break to the downside, which we are getting right now. As soon as we start to see price give us a potential to curl, the next thing that we want to do is get out our projections. Where can we set our targets? Well, we know that we can target that first low that I talk about all the time. Where can we put our stops? Obviously, if we can get all the way up to that other end, that's great. However, it's not going to give us that 2-to-1 risk to reward. And as I've mentioned numerous times in the video, chances are you don't want to see price even come back to 50 to 60% of that range. Right here, you can see that price had bounced off of this 447 level in pre-market twice, which means that 447 was acting as a support. Once we clearly break that, we're going to be looking for that support to return as resistance. Not just this level, but even potentially right here. That would be a great place to put our stops right above that. And clearly we are getting over a 2-to-1 risk to reward. Now, a lot of times people will target all the way down here and bring their stops, giving you a 3.3 risk to reward. Personally, I like to be a little bit more mathematical and stay to that 2-to-1 risk reward. That way I know if I can maintain a win rate of at least 50%, I am going to be profitable. If my entries are clean, if my sizing is done properly, I am going to make the same amount every single month. So let's see exactly how this trade would have played out. And let me tell you this, just because your target is here does not mean that you have to take all of your profits right there. I like to, as I can set it and forget it, leave, walk away. And if price continues to go down, great, so be it. This clearly would have hit in that target. We would have gotten our 2-to-1, and then I would have been able to move on with my day. If you watch this play out even further, which I am not going to, this continues to move to the downside. So if you did have some type of scaling system, you would be able to take marginal of your position, whether it's a couple contracts or a few shares, whatever you are trading. And for the last video, I wanted to give you an example of what this would look like on a 1-minute time frame and why sometimes playing these higher time frames like the 5-minute, 10-minute, 15-minute will give you a little bit more confluence. You're going to see less setups. However, there is less noise. You can see right here, right at market open, price had broke to the downside. It looked like it might have given us our potential pre-market break and retest. Price moved sideways, immediately went right back into that range only to break it to the upside. So be cautious on the time frames that you use, especially if you are new. I would stick to these higher time frames. Like I said, once again, there's going to be less moves and less trades to take. However, your chances of your win weights and these successful trades playing out is going to be a little bit greater. If you've learned anything from this video, please leave it a thumbs up, share it with as many people as you can, and leave a comment down below with any questions you may have or future videos you would like me to make. I'll see you in the next one.